And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets step at a time, look at the news, the action, prices, from a chart perspective, company news, corporate news, whatever it is that's grabbing our attention, help you guys understand it. We're analyzing it, giving you some insight so you can better run your daily routine. I got a fun show here for you today. We got markets hitting all-time highs. That's always a good thing if you're bulling the market here. Things are kind of moving to the upside, looking really, really clean from that perspective. Gold trying to find some support around the 1900 mark. We've got some obvious news we've got to discuss in terms of what the market implications are. We'll get to those things step at a time, but let's bring the coaches in, introduce them. First off, Coach Tyler running screens. Tyler, how you doing today?
Bull market, dude. If you're not doing good in this market, I don't know. You suck.
You're doing something wrong. Yeah, you are doing something wrong. Matt, how are you doing, sir?
Yeah, doing good today, Tim. Obviously, we had quite the news happen over the last 24 hours since we were in the halftime report yesterday. A little bit of a shock and awe type of day for a lot of us in America. But, I wake up very hopeful today, Tim.
Yeah, I do as well. And obviously, welcome out everybody. If you're coming into our show here right now, if you're a community member, long-term member of our community, hashtag Team Tackle, there's a reason we get together here every day, share ideas. We're growing together. We're discussing what is happening out there in the world, even when it's complex. And we're going to have to talk about a couple things that are complex from that perspective, but from the market perspective, it's actually pretty simple. Markets are going up and they're looking really, really good. Matt, yesterday there was a vote in the Senate and the House. There was a little bit of a debate that was starting early in the morning. By the time we were done with the halftime show, they were starting those discussions. I believe that they did confirm the Electoral College vote through the Senate and the House, issuing in Biden's new presidency here in 13 days. President Trump has made some comments about the transition afterwards and whatnot. But what erupted on Capitol Hill with the protests and what we saw, the images, regardless of where you saw them, they were startling. There's no question about it.
They were both shocking and disgusting. That is the United States Capitol building. It's a sacred building for us in America. And quite frankly, I believe a lot of people around the world were shocked by what they saw yesterday. Mm-hmm. And I do believe it's a very, very sad day for us in America. That is not who we are, and it's not who we need to be. Mm-hmm. And hopefully we get on a better path. But, just to give the news here.
Well, I want to make one statement first before you go. Everybody out there, if you're coming into our community, you know us. One of the number one rules is no negativity, No. And I know these are emotional times.
We're all Americans.
No question about it. But we're all here to grow together positively, trying to find ways to make more money, grow our retirements, grow our wealth, understand ideas out there, help each other get better. No negativity at all. Okay, so let's all focus on that. But Matt, go ahead.
What I said, kind of what I thought yesterday, Tim, was what transpired yesterday was shocking to many people. But I just kept thinking, that is not who we are. That's not who we stand for as America. That's not what we represent to the rest of the world. And we need to get back to who we are as Americans. And, I was very happy with the response from a political perspective. And I do feel like some of these moments can unify us to a certain degree. But it was crazy train stuff. There's no doubt about that. Just to give some of the news very quickly for those of you who are unaware or have not been living in the last 24 hours, pro-Trump supporters scheduled a protest yesterday to protest the Electoral College vote count. This is typically a ceremonial event more than anything. It turned very ugly very fast as protesters stormed the Capitol building while Congress was in session during the Electoral College vote. The insurrection is being seen by the market is really kind of a one-off scenario, Tim. And what I mean by that is it's really not going to change anything. Nothing that transpired in the last 24 hours changes where the market is looking at 3 months from now, 6 months from now, 9 months from now, a year from now. And so when you're looking at the market response, it was quite surprising to see the market resiliency yesterday. Like literally the volatility, when this thing was happening, when the news headlines were happening, it was amazing, the market resiliency. I never thought I would see a day where the news headlines are the Capitol building is being stormed and the market is bullish. That is an amazing thing to see. And even when you look at the intraday perspective, literally the only thing that happened in the actual stock market yesterday was a bullish retracement on an intraday with a little bit of volatility around 37.40. But even after that, I mean, once the market found its footing, I mean, the market just really kind of seen. And so when it just kind of started moving on, like there's nothing to see here. And when you're looking at it from a specific market response, specifically with what happened with the vote count in Georgia on Tuesday, with the Democrats controlling the Senate with their tiebreaker with the VP now, you have a Biden presidency. Even Trump today has conceded the election. That needs to be understood. Trump today, this morning, conceded the election. He did not concede that he lost but he conceded the election, and he promised towards a peaceful transfership of power. And the market yesterday is looking at the scenario as, yes, it's a sad, sad, sad day in America, but it really doesn't change anything. It doesn't change that in 13 days from now or 12 days from now, we are going to have a new president with a new administration, and you're going to have a Democratic Senate and a Democratic House. And the market is focusing on more fiscal stimulus money moving forward. It's focusing on a more cautious Fed, given that the government is going to do more fiscal policy. It's focused on the inflationary environment. Tyler was talking about that with what is happening with bond prices earlier today in the pre-production show. And it's focusing on infrastructure. And everything that transpired yesterday, the simple reality is nothing that was transpiring yesterday was going to change anything related to the transition of power in America that has been very consistent since the late 18th century. I had to think when that first election of George Washington, 1792. So in terms of this, it's amazing to see all the news yesterday, and then to see the market response being very, very muted. And the only response I had earlier, like when it was happening, is if what transpired yesterday can't even create the market violating a intraday support level. Think about that. With everything that transpired yesterday, the market didn't even break a short-term minor support level. Question I have for you is, what's going to stop this market moving forward?
Yeah.
I mean, it like what you saw yesterday was the antithesis, was the exact same thing every bear in the market in the last 3 months has been fearing, has been so scared about, has been like, this is the environment that can bring down the market. You got it yesterday. You got the attempt at a lack of a peaceful transfership of power, and the market was still resilient. The market was still resilient. I'm not sure anything can bring down this market in the short term.
It's a great question and an interesting thought. I'll give you a couple of perspectives from my side of it. Tyler, during yesterday's halftime show, this is not when that volatility kicked in. When we ended the halftime show, the volatility started kicking in. I've got lunch. I'm watching markets. I'm sitting here with my coffee still as well. I didn't one time think, man, I got a hedge. I didn't go out and buy put options. I did not spend 5 minutes thinking, man, I better go out and protect, because I wasn't worried about market response then, because really, what is the market implication here, right? I mean, we're talking about really a disturbing scene, a terrible day in American history. There's no question about it. I've got a lot of thoughts about those I'll keep, but I'll tell you, market response was resilient. I mean, Tyler, what are your thoughts? What are your thoughts on this?
I was with a student when the thing was melting lower. Look, the reality is, like, small caps hit up 5%, right before we were done yesterday, and you had a couple percent intraday sell off. But when you start from such a high vantage point and such a position of strength, like, you have to view weakness as you have to view it opportunistically, right? It would have been different if we were breaking pivot lows. But that's the type of volatility that's scary and results in whipsaw. When you see an intraday sell-off like that from a position of strength and a high, it's not enough noise to get you to do anything. I would agree.
While we're on this chart though, Tyler, can you give me a full technical breakdown on the S&P 500 here? Let's actually look at what's going on from a chart perspective.
Yeah, I think the NASDAQ tells the tale today, but as far as the S&P goes, remember, this has been a small cap led affair for the last couple of weeks. And I am pleased that you're seeing kind of a broadening of the rally. And honestly, I feel like a broken record every time I come on here. You guys talk about it all the time as well. It's just rotation. We're just shuffling the deck like again and again and again and again. One area chills out, another area picks up the slack, and then the next day they rotate. And so here you're seeing large caps play some catch up, right? I mean, money was just flooding into small caps yesterday. And you see today, S&P 500 up another 1.3%, breaking out to a new record high, and accelerating as well. I mean, if you look at this is subtle, but if you look at the relationship between the pivots, we had slowed down a little bit there. Well deserved, if you ask me. But really with this breakout, Tim, also a little bit of increasing momentum coming in here too. So, provided we close up here, that's a sign of strength, and I think reason for optimism as well as far as the S&P goes.
And you mentioned the NASDAQ yesterday. I heard all over the place that tech was dead. Is it not dead? I mean, I thought it was dead for a day, man. Did we revive technology?
Wait,
here?
tech's not dead?
Well, I mean, that's what I heard from everybody. It's like big tech is dying because of XYZ, and no.
No.
not
No.
going up. Not going up one day is the new dead.
Is the new dead. You got to love the bears on things, but no, I mean, tech's not dead. I do believe there's going to be an increased conversation over regulatory measures within big tech, but I've long held the belief that I believe the companies like Microsoft, Apple, Facebook, Amazon, these high-flying big tech plays out there, discretionary plays, I just feel like they're always going to be in front of regulators. So, like, good luck. And I'm sorry, I just do not believe the government will ever get rid of Section 30. I just don't believe that's ever going to happen. Section 30 represented way too much money to America. It created an entire industry that created trillions of dollars of economic wealth for America. It's not going to get changed just because some people don't like the headlines over Section 30. It's just not going to happen. So I get it when that news is out there in the environment, people get all freaked out over that. I just don't believe that the government's ever going to be able to regulate this to the point where it's going to really impact their growth.
Tyler, is there a potential trade here on this breakout on the Qs? I mean, you just look at it on the broad index here. Obviously, we're talking about how tech's not dead. They've got the big strength here today. This 4-day week is really interesting. I mean, they took it on the chin early in the week, hesitated, all the kind of people speculating yesterday about what it meant. But now here we are, 2% up, approaching this all-time high in a breakout. I mean, what are you seeing here?
Well, I think it goes to show you again, when you see a day like yesterday where one sector drops 1 or 2% and you have another sector going up 4 or 5%, it is not widespread liquidation. It is not everybody ringing the register. It is just rotation from one area to the other. It's when you see a day, like if yesterday saw the NASDAQ down, whatever it was, 1.5%, and the S&P down 1.5%, and small caps down 1.5%, then you have a little more ammo to your bearish argument. But when it's a one-day thing and when it's money out of one area into another, it's typically temporary, transitory, something that will end and resolve itself in the direction of the overall trend. So today confirms that yesterday in tech was a bit of a one-off. And what that means, Tim, is, yeah, look, I mean, if you go look at financial stocks, bank stocks and metal and mining stocks and basic material stocks and Caterpillar and Deere and solar and pot, all those guys that ripped yesterday, you say, man, I can't find a trade. They're extended. Well, au contraire, just go look at tech, right? There's a lot of stocks that pulled back. And so if you don't want to chase the high flyers, what you see as a silver lining with tech lagging a little bit is you're not chasing. And this is a breakout trade. Yeah, I mean, the Qs here look pretty good. I mean, if this does what the S&P does, Tim, you'll have a nice breakout to a new record. Probably in an hour, I don't know. But yeah, I mean, this is certainly much less extended than if you were chasing small caps here.
Yeah, because it took some time to digest a little bit here. So there definitely some interest. But like you said about small caps, they are feeling extended to me here, Tyler. It doesn't mean I'm going to bet against the momentum. It's been a juggernaut for a while. But that IWM obviously is a little extended. Any other thoughts on the Qs and then the small caps?
Nothing else on the cues. I mean, I'm happy to see the strength. I mean, it was a little bit unnerving late day. Apple sold off, got pretty ugly, but to see them come right back today, I think is just encouraging.
Yeah, Maddie.
Well, yeah, and I want to go back to the S&P a little bit because I do have the Russell 2000 a little bit overextended in the short term. But even with the Russell 2000 overextended in the short term, you got to love still the strength it is showing today. But I want to talk specifically about the S&P as well. Because I do agree with Tyler on the Q analysis. You're looking at that as a breakout, and if you reclaim that 315.29 level, you should see a leg up. When you look at the S&P here very quickly, though, and you're saying, okay, well, what about the S&P 500? Well, when you're looking at the S&P, you're looking at this as a breakout here today as well. And it's a little bit of a different pattern in the S&P than what you're seeing actually in the NASDAQ. You got a little bit more of a fade action here. But even though you've had a little bit of a fade action with support, you haven't had any momentum on breakouts. Every time you've threatened a breakout, you had a doji coming into that breakout and you saw some weakness on the downside. This is really the first time on a breakout that you've had some significant price movement breaking out of the S&P 500 really ever since you broke out with the vaccine news with Pfizer post-election. And so although I do agree with Tyler on the NASDAQ, I'm looking at the S&P here and I'm saying very similar to the NASDAQ, I don't see this in fade action anymore. I see this as the beginning point of a potential leg, very similar to what we're seeing in the NASDAQ. And the difference in those two is quite significant, in my opinion. When you're looking at the S&P and you just have this fade action off support, you're like, yeah, I'm looking at dip mechanics. We talked about that on Monday, literally on Monday on the sell-off. What did we talk about? You're looking at dip mechanics right here. And you're looking at dip mechanics because that's what's happening in the pattern and the trend in the S&P. You don't see strength in breakouts. You see the strength coming back in the support bounce off that 20 SMA. But when you're looking at this today, this is the first time in the last three breakouts you've had a true breakout breaking resistance with momentum. And so I look at the S&P and I say, yeah, you gotta have that mentality of it's a little bit of a go time in the S&P. NASDAQ hovering right underneath that breakout channel. Certainly agree with Tyler saying, let's go pick some NASDAQ plays, some tech plays out there and see if we can find some front running, with confirmation in the stocks, but front running on the index a little bit. Totally agree. I just wanted to make that point on the S&P because I do believe you got some blue chip opportunity here as well.
Yeah, I love that point. I'm glad that you brought it back to that as well. I think it's a really good technical read on that. And then Matt, you do have the small caps overextended a little bit as well. Is that
right? I think you have to in the short term, not in the long term. You got to respect what's been happening in the small caps ever since the election in November. That really has been the stories, of the marketplace. Those small and mid cap stocks and their movement they've had, the momentum they've had, and we came into the year and we had that prediction podcast, and one of the questions was, can the small caps continue to lead? I think this is the environment where small caps continue to lead. So in the short term, yeah, after a big up day of 5%, you might be hesitating triggering into that because you're most likely already in some of that. And so you might be hesitating a little bit, maybe wait for a little bit of fade action before you trigger again. But no, I don't see a lot of triggers today. I just see a lot of momentum continuing today. I see the new triggers happening in the NASDAQ and the blue chips S&P.
By the way, Izakar Guitar Flip in the chat, he says, is this a +3 market? And I think I still got a +2 personally. I do.
Guitar, that's a great question. I've never seen a +3 market, so I'm going to say no. But the difference between +2 and +3 is really up to the individual. I have never, ever put the market in a +3 territory. I live in the +1 to +2 because I think radicals never actually win out long term in the market. I will go to +3 in certain industries sometimes, and I'll certainly go to +3 in certain instruments. Obviously Bitcoin, for example, would be whatever highest rated thing you could have.
Whatever number you want to throw at it.
You want to go +4?
Yeah, sure.
+5?
I got you. I'll
Like
one up you.
what? Like
Sure.
+6? Whatever it is. But in the market, when you're talking about the S&P 500, 500 companies, I think it's very difficult to get that type of momentum in the market where you are just that level of euphoric. When you're looking at the Russell 2000, you're talking about, around 2,000 companies in there. So I just think it's a little, I think it's foolhardy to a little bit to go into that +3 territory where you are just like delta positive all the time, everywhere. Pop those out of the money call options like they're Smarties, and let's have some fun. I think we could need to be a little hesitant there, because I just believe radicals over time in the market get hammered.
Mm-hmm. Yeah, Tyler, you chuckled at that. I saw
Pop those out of the money calls like they're Smarties, and let's have some fun. That was great. That was. I've never popped Smarties. I have had some fun eating Smarties as a kid, but
listen, I'm not responsible for what comes out of my mouth. Anybody who's been around tackle trading the last 7 years, they know I am not responsible for what comes out of my mouth sometimes.
Popping like candy.
I'm going to use that. I'm going to use that.
By the way, I hear you did use some pretty good dad joke lines last night. I haven't seen them, Tyler, but I already saw a few comments in the chat. Apparently, you're winning that part of that competition. Is that right?
Well, I lost on the overall last night, unfortunately. I think it was sympathy to our Canadian friend. I think Mark is just tired of giving me the thing, but whatever. I mean, I'm not going to say it was stolen from me. I'm not going to say we need a recount or anything, but
what happened,
too soon
Ty,
on that? Maybe, I don't know.
Ty, this whole thing, you were coming at the champ here. Like, what's going on here?
Like I said, I mean, Mark's got it out for me.
Mark, I'm gonna have to review the recording.
I got to look at this too.
Mark does have some subjective historical performance as a judge.
Mark's not King Solomon. Let's just say that.
No,
he's not the one.
No. He's not the objective. He's not objective.
No, he's not.
No, but look, Greg can't be beat by a greater guy. Greg was good. In fairness to Greg, those were the best picks he's brought. I mean, we've gone head to head twice.
There's no way Greg beat Tyler in a straight up competition on technicals. I need to review the recording.
Yeah. By the way, Trade Masters is our Wednesday night show.
Old Money Holmes, if he's writing covered calls on dividend fireworks, I mean, yeah. But
I haven't seen it. But
I have to see.
Greg probably tugged at Mark's heartstrings about value and cash flow and all that kind of stuff.
He spoke to his audience.
I can already see it right now. Is that right, Ty?
He spoke to his audience.
I was robbed. I'm just saying, give me a recount. I'm gonna send Giuliani out there to fix this business.
Yeah. Let's flash you commodities here next if we can, as we're continuing through markets. By the way, one thing we got planned here for today for you guys is we're going to break down a potential option trade on, and I believe it was Peloton, Tyler, you looked at last night. We're going to extend that conversation, go through some detail in a potential option trade on that later in the segment during our coaches.
By the way, congrats to Greg for dethroning the champion, Tyler. Well,
yeah,
old Greg.
Hey, like I said, credit where credit's due. He brought some good picks.
I like it. I haven't
Gotta step your game up, buddy.
Got to go watch it.
Dude, I tried. You know what the hard part is that after yesterday, look, small caps were extended. My usual, it was a little bit trickier to find setups. We found some, but you let me do this after a 3-day pullback and I'll kill them. I just kill them. But it was a tough market.
I like it. Break down crude oil. Then we're going to move on to gold next. Tyler, let's start with this one. There's not much to update here. There were some EIA numbers over Wednesday in the afternoon. Not a big deal though. Crude's kind of just hesitating here, range up. What are you seeing here technically?
It's going to run out of gas a little bit, right? I mean, this looks like the Russell 2000 where it's like, look, you had a massive bar. You're going to get some smaller bars. It'll probably pull back. I think you want it. I mean, energy stocks need a bit of a pause or a pullback. There aren't really great entries here. I don't mind this at all, quite honestly. Give me a little bit of a pause. Remember, there's a crude oil, right? There's not biotech or Bitcoin. Hasn't been a massive runner for the last 6-7 months. So I don't know. I guess you had one here, but I don't mind a little bit of pause here, Tim. I think as long as it stays above the 20 MA, I'm not going to fault this at all if it wants to pause or pull back.
Yeah. I got the same rating as I did yesterday as well. In that, I don't think it's necessarily bearish, but a pause might be there. What about gold here, guys? Because Matt, you said this earlier. This is exactly what you want to see from gold. Looking at the chart, we sold off a little bit yesterday. We came from 1950 down to 1900. Good red candle,
Yeah.
but now we're sticking that for at least the intraday here. A little hesitation around this 1900 zone. What do you want to see from gold here, Matt?
You want to see exactly what you're seeing here today. There is nothing else you want to see. You want to see that momentum slow at that support level. You want to see 1900 hold. You want to see that 9 EMA that Tyler does not have on his screen. You want to see that hold as well. You want to see these levels of short-term support levels hold here. Unlike what transpired the last time we broke out and then volatilities came at us, remember that violated, and then I talked about this yesterday in detail when I was talking about the trend and the pattern coming into this potential breakout versus what we were seeing last time. And I felt like it was significantly different than what we were seeing last time. I felt the trend, the pattern, the consistency was much better. The areas of support that is going to help you stop any short-term pain to the downside, much stronger levels of support coming into this type of movement as well. And so when you see that volatility yesterday, and yes, I do think it was a complete overreaction to the risk on environment in the stock market from yesterday. But think about the continuation we're seeing today in the market. You're seeing the market continue to go up, S&P breaking out, NASDAQ doing great, the continuation in the Russell 2000. And what is gold doing? You have the exact same philosophical environment over gold, pro stock, risk on environment, buy large cap, buy tech, buy Russell 2000. You do have a risk on environment, but yet gold sticks the landing. You want to see this. This is very healthy for gold in the short term. Now we're not out of the woodworks yet. We still got to navigate that 1900 by 1910 support level right where the 9 EMA is as well. But as long as that level holds, you're still thinking you're off to the running in gold.
Mm-hmm. Tyler, anything you want to add to that?
Oh, I agree 100%. So far, so good. And, momentum traders, people that would want a short-term boost this higher, they got better fish to fry elsewhere right now. So it's fine.
Mm-hmm. Yeah. I love the analysis. And for me personally, I'm right with you, Matt. As long as things kind of like stick, hold, and this is the healthy development that I want to see personally. I like the breakout recently. Everybody's been tracking this. Keep your eye on gold here, guys. The dollar next, if we can. We got some economic data as well. I did want to get to at some point here today, Matt. Good time for it right now while we're talking about the dollar. I saw some, unemployment claims numbers come through, ISM services numbers come through. The dollar still in this fading downtrend. Had a little bit of a pop here over the course of the 24 hours, but I don't see any different analysis from the chart in too much here, Matt. But what are you seeing in the dollar and the economic data?
In the economic data, we did have a couple economic points today. You did have initial claims, which, quite frankly, I don't care much about, and I don't think the market cares that much about it either. You came in at 787,000 on initial claims. When was it? 6 months ago, that became the new norm, and everybody's like, "Oh, look how good it's coming down. It's going to come back down to normal." 6 months later, we're still at 800,000. Guys, this, like I said, literally almost a year ago. Don't listen to anybody telling you this is going to be a short-term situation from an economic perspective. We're in this for the long haul, and the labor market is going to take years to get back to normal, whatever degree of normalcy we will see after this is all said and done, because there are certain jobs, thousands and thousands and thousands and thousands, that will literally cease to exist. Entire industries that you typically would think a consumer could go get a job in will cease to exist. We don't know what the new norm is in the labor market. What we know is right now, the new norm is right around 750,000 initial claims every single month, which from an economic perspective is disastrous, absolutely disastrous. And so when you think about, well, look at the stock market, it's at all-time highs. Why in the world would we do trillions of dollars in stimulus? Because the stock market, and if anything yesterday was proven, the stock market is not a reflection of reality. Okay, it's not a reflection of the economic reality. And so when you're looking at these labor market numbers, it doesn't, to me anyways, it doesn't have an impact on the daily price action the same way it did historically. I don't believe this number is an important number to the market as of right now. However, what it does do is it gives all those politicians, both on both sides of the aisle, all the ammunition they need to do another massive fiscal stimulus coming into 2021. And so when you're looking at these economic numbers, the market's not going to price in the negativity, because all it's going to do is increase the probability for more fiscal stimulus. And that is what you saw out of the labor market. So the key takeaway from the labor market numbers today is simply it gives the government more ammunition to continually pump more money into our system from a fiscal perspective, which means the central bank, which has been the primary instigator of all price action in the last 12 years, is now taking a back seat to the fiscal government. And that is what Jay Powell has wanted for the last 6 months. He's been begging that for the last 6 months. He is now getting that from the government. And quite frankly, he's got the united government to be able to do it. And so I think that's what you're seeing in there. And you're seeing that reflected in the stock price today. Market appreciation, a lot of that coming out of this economic report, increases the probability for fiscal stimulus. Remember, in some of the worst economic environments of 2010 through 2013, some of the most nasty economic numbers, markets were skyrocketing. Why? Because QE, because money, because we're increasing the money supply. Today, markets up on negative economic news. Why? Increases the probability that we will get more money. That is the number one factor in the market today. And I'm not sure there's a close second. Fiscal stimulus and the thirst that Wall Street and investors in general have for, quite frankly, socialism. And so it's going to be interesting to see if this can work long term. I have a tremendous amount of questions on modern monetary theory and the efficiency of it and the actual impact it has. However, in the short term, over the last 12 years, money has driven this market, and money will continue to drive this market, and negative economic reports will be seen as positive to the market. Negative economic environments will see as positive to the market, because that is going to force the fiscal government to put more fiscal stimulus into the market, and thus see higher rates of inflation, which stock market is an inflationary asset class.
Bitcoin last I want to take a look at here if we can. By the way, Matt, the people are calling for a Tim Matt showdown in Trade Masters.
Tim doesn't want that.
I could handle it just fine.
Tim doesn't want it.
My biggest objection is we'd have to set the rules. Mark can't judge, so we'd have to have Tyler come in and judge.
I'm a minus 900 fave. No.
I don't mind playing the underdog role.
I'm the guy that has nothing to win in that. Like, what do I win?
Yeah, well, what advantage do you have? Maybe one day. Bitcoin, by the way, Matt, topped over. Did we just clear 40,000? Holy cow. Literally.
Pots of 9.
I'm looking at the chart here. And from earlier this morning, when I grabbed my image of where
Bitcoin's
the chart was.
Bo Jackson on our tackle trading football field. He ran into the, went right through the tunnel. He's going home. Like, there's no end zone here. It's just, wow, impressive.
From when we started calling the bull.
How many people do you think understood my Bo Jackson reference to running into the tunnel on a touchdown? I'm not sure you did.
50. No, I got it. I got it. Okay. 50. Yeah. Although Bo Jackson may be the greatest athlete of all time. He running into the touchdown is one, but on the baseball field, when he would climb the wall because he was just running too fast as well. Those were amazing scenes as well.
Bo Jackson was just way too good.
Yeah. Oh, and Linda, I already know what bias you have, so I don't expect you to root for me.
Linda is a very, very objective
I'm sure.
person.
Sure. Yeah, I'm sure she is. All right. Anyway, I don't know what you can say about Bitcoin besides the fact this is just incredible. Again, for another day here, Thursday, 4 days in a row. We've just been running.
Bo knows Bitcoin.
We've been running.
That's right. Bo knows Bitcoin. David guys are bringing it in strong.
One of you, I want you to give me a deep dive analysis as to how you can interpret Bitcoin here at 40,000, having run, well, I don't know, 10,000 in the last 3 days. Tyler, we're up 25%. So what do we do with this?
Well, it's a good case study, and investor psychology, crowd psychology. It's this virtuous cycle, right? Higher prices beget the expectation of even higher prices. I heard a pretty good analysis on Bitcoin in support of being bullish. Everybody who said when Bitcoin was 10,000, I'll buy it, but I'll wait till it goes to 2,000. Like you now have all these buy limits where people are like, well, fetch, now that I know it can go to 40,000, I'm a buyer at 20,000, right? Or I'm a buyer at 25,000. You got to believe that the general upward whatever is here to stay. Like if you didn't believe that this was here to stay, it's very hard to argue against it now that it's not a buy at any price. Obviously it's a buy. It's just, when is it going to give it to you, or will it pull back? Who the heck knows? We're all like grasping around in the dark when it comes to analyzing any fundamental thing around this, but it's impressive. Look, it's fantastic. It's great. I'm so happy for people making money on this. I remember a long time ago in a Trading Justice podcast when you guys were bannering about this when it was like $500. I'm like, I'm not going to Coinbase account. What are they talking about? Bozo. Sure, it's going to be worth something. Yeah, I believe you.
This is gonna surprise some of the members of Tackle, but we were promoting Bitcoin when it was $100.
Yeah, you've been talking about it a long time. I remember.
We were all over since about 2013 on. So it's just a matter of, like, Bitcoin's one of those things I look at and I'm like, I wish I would have just stuck.
I know.
Yeah, I wish I would have just lost my key and then found my key like 5 years later.
Right.
Like that's one of those things. Like I wish I wasn't a trader when I found Bitcoin. Like I wish I was the guy that just found Bitcoin who didn't know anything about trading and just park cash.
Yep.
I wish I was that guy, but you can't play that game looking back. You got to make decisions at the time, and quite frankly, whether you regret those decisions at the time, you got to use them as learning tools. And if there's one thing that Bitcoin has taught me is that I need to park cash more than I need to trade cash sometimes.
No doubt. When the top will come when the ATR of Bitcoin is the value of a Ford truck. When this starts moving a Ford truck each day up and down, then we'll call it. Volatility is officially peaked.
Well, based on what JP Morgan said today, it's going to match the market cap of gold in 2021. So we'll get there. Yeah, I mean, it only took gold 6,000 years to get to that market cap. Let's get Bitcoin there in 6 weeks. Like come on, it's impressive to watch, but come on, it's crazy.
We're 25% above the 90 EMA.
Crazy trade.
There's not a new entry here unless you just want to gamble. You want to put money on red or black, that's fine. But I mean, you're 25% above the 90 EMA.
I maintain the same thing. Like it was a really good tradable instrument up until 24K. And now euphoria has just taken over, and
it's gotten crazy.
I'm not going to be the guy that tries to guess the top on this one because this is ridiculously bullish. Nobody wants to sell. Like there's nobody does.
Yeah. And I think there was I don't remember if it was Cody or Tyler talking about earlier in the week, but I mean, when you do have something that's built a lot of price appreciation, it's an underlying thing that you don't necessarily want to get rid of. You can always scale off. You don't have to sell everything, right? So if you had a small position in Bitcoin, you want to take advantage of the rally, you could sell some of it and lock in some profit and all that kind of stuff. It's a juggernaut. It's been incredible, and it did top $1 trillion in assets for the first time here.
Amazing.
In terms of total crypto value.
Listen, really I am completely cheerleading this. I'm very happy for anybody making money at this point in Bitcoin, but to me, to me, this is no different than anything when you see parabolic. I'm never going to be the trader that chases parabolic movements. It's just not who I am.
Well, and one of the concerns I have over the last couple of days is even Ripple is up like 40%.
Ripple's a bankrupt company in 2 years, guys.
And they might literally be dealing with legality in a way to where they're looking at penalties, bankruptcies, dissolvement.
They better hope to God they're categorized as a currency, because if they are not, they're bankrupt.
Oh yeah, Josh, you're right. Bitcoin should scare everybody a little. So,
if
it doesn't scare you a little,
you're not human if it doesn't scare you a little. That type of volatility, and so a lot of times when we're talking about we're never going to be the trader that chases parabolic movements, it's because We've been burned on those before.
Mhm.
And so it should remind you. I mean, how many traders here have been burned on a parabolic movement in their life?
Oh, everybody.
Every
I
one of
have.
us.
Every one
Every
of us.
one
have.
of us.
Yeah.
And they always feel the worst. Like they always feel the worst. So yeah, I just, I'm cheering it on. I'm glad, but I don't think there's been a trade here since really the breakout of 20K, and then the high base at 24K couldn't have been traded because it gapped up unless you were trading in a crypto
Over the weekend.
account.
That was an over the weekend one. Tyler, one note I just saw in my notes, and I want to make sure I did not miss, actually, was you had some comments on interest rates and the dollar. While we're on broad market analysis, I was really interested in what you were saying earlier. Can you share those ideas with the team and your thoughts on what's happening with interest rates today?
Yeah. So when you look at inflation, so a long time ago, I learned about intermarket analysis, the relationship between inflation and interest rates and stocks. And on Wall Street, you hear about the CPI, the Consumer Price Index, which is just the industry standard for what is inflation doing. But what you want to pay attention to is when assets start to change their behavior, it can help you to see that Wall Street is kind of shifting expectations. And so you've heard for a long time, hey, stimulus can be inflationary. When inflation goes up, interest rates go up because debt investors demand compensation for the opportunity cost of lending money to somebody. So fundamentally, when you see interest rates start to creep higher, that is Wall Street starting to price in more inflation. And so just the reason I bring this up is yesterday, I actually just finished refinancing my house. And yesterday, my lender, my mortgage guy called and said that mortgage rates and mortgage-backed securities went up. Interest rates went up a lot yesterday. So you not only saw a massive shift into small cap stocks and into these areas in response to the expectation of more spending and more stimulus, you also saw that in the debt markets, which impacted interest rates. And so not only did it impact mortgage-backed securities and mortgage rates, but we usually view things through the prism of treasury bonds and the yield or interest rate on treasuries. So if you look at any kind of bond price or bond ETF like TLT, which is a long-term bond ETF, you can see that this has fallen out of bed the last 2 days. And that tells you that long-term interest rates are going up, right? Bond prices and bond yields move in opposite directions. So pretty big down move here in long-term bonds. You can say the same thing in like intermediate term bonds, like IEF is an intermediate term bond ETF, breaking some pretty significant support levels. And so the corollary to that is if you go look at interest rates, your TNX is the 10-year treasury yield, which is kind of the go-to benchmark for interest rates. You can see this thing breaking out, right? So you're starting to see interest rates really increase in momentum to the upside, which you could argue, again, goes along with the inflation theme. Wall Street's starting to perk up a little bit. And in addition to stocks obviously doing very well because of stimulus, you're starting to see ripple effects in the cost of capital with interest rates and such. So, so far it's interesting. The doomsday scenario is eventually inflation is going to kill us all and interest rates are going to be a gajillion. Yeah, we'll see. But the market is waking up to this, Tim. You're starting to see a change in trend when it comes to interest rates.
Mm-hmm. Yeah. And I love the analysis, by the way. And obviously when you get pulled into refinancing homes and all that kind of stuff, you start paying attention to the interest rate market quite a bit. Thanks for bringing that up. And I'm glad that I saw the note and the reminder. I think it's an interesting note here today and what's happening in price action. Let's move on to stock talk and let's have a conversation about some of the companies that are in the news, things that are happening right now. And we've got to start with a couple of different calls to action, actually, while I'm looking at my reminders. Number one, if you're watching our show for the very first time, click the subscribe button, click the bell, come back and join us every day. Team Tackle, I'm loving the conversation in the chat today. You guys are the best community out there. So grateful to be a part of it. Now let's talk company news. And we got to start with Facebook, actually. Facebook, Twitter, The two of them. Matt, Facebook came out this morning, and actually Mark Zuckerberg, after they had suspended the account of the president yesterday, they said that we are going to lock down President Trump's account for the next 13 days for the remainder of his term. Twitter put a little short-term ban on it. There was some other context to this, and I'd like you to kind of give some insight and some context to what's happening here with these social media companies. Is there a market reaction here? Is there anything we need to think about with the stock? And what's your thoughts on the news?
Well, just specifically, just to make sure our community is updated on the Twitter and Facebook news. I know lots of our community either trade either one of the companies. I know a lot of people own Facebook. But there was some interesting news that came out following President Trump's Twitter. It was the video he put out there on Facebook that also got put out there on Twitter. His response to what was going on with the protest at the Capitol. And I watched the video. I disagree with the video. I just feel like you got to, as a leader, I feel like you got to come out with a much stronger term than what that happened. And there was a lot of pressure being placed on Facebook and Twitter to take some action here, and quite frankly, not from Democrats, from Republicans. There was a tremendous amount of pressure being placed on both sides of the aisle on Twitter and Facebook to do something with all the panic that was happening to a certain degree yesterday. And Twitter immediately removed the video from Trump's Twitter account. Also removed 3 different tweets from Twitter, Facebook, and therefore they put a ban on Trump's Twitter account for 12 hours. Facebook followed that up with a ban on Trump's Facebook account, and then basically Facebook followed that up with a permanent ban until the inauguration on the 20th. Trump did remove his tweets that Twitter wanted him to remove, and so he does have access to his Twitter account. But the reason we need to bring this up is because there's a lot of speculation that, specifically with Twitter, that Trump's going to be removed from Twitter at some point post the inauguration. And does this have an impact on Twitter's price action? Does it have an impact on Facebook's price action? I certainly feel like, let me put it like this. I don't feel like touching either one of those 2 companies right now. Like I just don't. I can't get a good feel for either one of those companies and how they're gonna be handling the next couple weeks. I feel like there's going to be a lot of controversy around these 2 companies and what happens with these 2 companies, not from a regulatory perspective over the next few weeks, but simply from a speculation, news, politics. And anytime politics is around a company, I kind of want to stay away. And so Facebook and Twitter, for me, just in the short term, they're stayaways for me until we start to see a little bit more stability and price action here.
I mean, think about it. How many great picks and stocks have we looked at this week? How many great trades were on the Trade Master show last night from Coach Greg and Coach Tyler? I mean, we're going to be looking at trades here in a minute that are great setups. It's like, why invite the headache?
It's not that. It's the fact. Well, yeah, why invite the headache? But it's the fact that there's going to be political conversations around this, and they're going to be extremely heated. And we all have our opinions. I'm a First Amendment type guy. I just am. Kind of like I think all of us should be First Amendment type guys and girls. But at the end of the day, as a trader and as an investor, you want to stay away from areas of the market that have some uncertainty in them. And remember how much the market loves certainty. I just feel there's a tremendous amount of uncertainty around Twitter and Facebook right now. And I don't think I don't think it's easy to understand exactly how the market's going to approach these 2 stocks. So they should be stayaways in the short term. Facebook's a stay away for me in life in general. But in terms of just the next
But you love the Facebook group.
I know. Listen, I love the Facebook group, but it pulls me into Facebook. And I just like, yesterday I had a good day of cleansing. But no, it was, yeah, I do love the Facebook group, but I can't stand Facebook. So I'm not, let me just put it like this. Not a fan of Zuck.
No.
I'm
a stay away, Tyler.
I'm a stay away. I think
I don't see a reason to touch him until maybe down the road when there's more clarity or less noise or whatever. I don't know if you have any extra thoughts to that. But
the market's making that decision easy, right?
Yeah.
I mean, the price action hasn't been good anyways, so these probably weren't top of your list already, anyways.
Yeah.
Well, Twitter maybe a little bit more than Facebook. Twitter had a good little trend going into it. There was some analysis on Twitter specifically on that 20-day moving average. Could you see some movement? I just think with the news today that stops you from looking at Twitter. And I agree with Tyler on Facebook. There was nothing to see on Facebook anyways.
Yep.
And then we did have a few companies start to report earnings, Matt. I know this is going to be you got to rip the Band-Aid off. We're starting earnings season here pretty soon. You know, this is not the official start of it. We got the financial stocks and that, you know, here in some bit, but throughout the month of January and February, we're going to have a lot more companies that do have earnings. One of them happened to be one that is a Tackle 25 stock, I believe, Matt, you know, on the list, one of our list as well. Walgreens Boots, Constellation Brands, and Conagra. Did any of the earnings numbers stand out to you, Matt?
I'd say again, I was reading chat T. Conagra. Yeah, Tackle 25 stock, Conagra Foods here. Important to know that we are breaking the 200-day moving average. Now, again, when you're talking about long-term investing, when you're talking about covered calls and cash flow systems, you don't get out of an investment or a cash flow scenario because it violates a support level. You write calls against it to offset risk, and you have to make a decision whether or not to add put options to collar the investment so that you can continually write calls against it. And if you don't know what that means, go to the Tackle 25 and watch the 2 hours of video content teaching you how to do covered calls. So in terms of Conagra, let's go through the numbers. 81 cents on the EPS number, 73 cents on the expectation, a little bit of 8-cent beat on EPS. Revenue did come in at expectation at $3 billion versus the expectation of $3 billion. Revenue did increase 6.2% year over year. And they did reaffirm guidance as the guidance as well. Constellation Brands just getting beat up a little bit on the raw numbers, showing a little bit of weakness coming into it. The violation of the 200-day moving average has to be a little concerning here. Tyler, in your long-term investments, you've seen stocks go up and down, up and down, up and down. How do you handle, and obviously Conagra is not a trading company. Conagra is a food processing company that you write covered calls against and collect a dividend and all of that. But in short-term pain like this, Tyler, where you're having a little bit of a negative reaction to an earnings numbers, and their earnings numbers were not bad, but the reaction is fairly substantial for a company like Conagra. Do you look to protect here by collaring the trade, or is simply writing the calls enough for you to offset the risk?
My preference on long-term investments is to own a small enough position where I can just handle the normal month-to-month, year-to-year volatility. I personally don't like the headache of buying something for the long run and then every 3 months having to be like, okay, I got to protect this thing, and I just don't even like to mess with it. So me personally, Matt, I have a small enough position. I'm willing to ride it through bear markets, and I just use the short calls to offset the risk if I need it.
Mm-hmm. Yeah, and for me on a company like Conagra, this is not a high-flying tech company that gets cut in half in 4 days. No, right? This is a company that even in its biggest pain of you know the February March drop in price went from 34 to 23, went 30% down, and then followed by recovery and then hung out. So the thing I love about these types of companies with writing covered calls on, even in downward movements in price, a lot of times you can simply write against the stock to offset loss until it finds that support level, compound, reemerge into the market, and you're basically offsetting loss just by writing the covered call. On a little bit higher volatility stocks that you write covered calls on, you got to think about also adding the put option as protect.
Mm-hmm. Yeah, if it's a higher volatility stock for sure, but obviously Conagra is one of those more conservative consumer staple type companies. I know that it's kind of in a consolidation, but I believe if Coach Mark was here, I mean, those MAs aren't as important when you're just all bunched up and messed up, right, Tyler? I mean, they don't play the same role. So
yeah, flat moving averages aren't as significant. And I would say that as you look at the long term of Conagra, to Matt's point, this is not a stock that you want to obsess about short-term support and resistance. It's not a trending stock. It's just kind of a boring dividend cash flow type instrument. So you do need to, I think, view the importance of moving averages through the lens of what is the personality of the stock. They don't matter the same to every stock. So that's a fair point.
Mm-hmm. And there were 3 other companies that had earnings that at least, you know, the names grabbed my attention. Matt, did any of the numbers grab your attention? Tyler, you can flash through them real quick. STZ, you know, Constellation Brands, you know.
Yeah, let's take a couple stocks very quickly. Constellation Brands, Constellation Brands, good cash flow stock, one of those companies in the liquor space that people like, especially in pandemics where people like drinking a little bit more. But Constellation Brands here, former Tackle 25 stock from a couple years ago, Constellation Brands, comes in at a really, really good beat on EPS numbers at $3.09. That's why you're seeing the gap up in price. The expectation was 241, 2.6 on the revenue versus 2.2, so a good beat on revenue by 20% as well. Revenue did increase year over year by 21.2%. They also had a slight, albeit slight, they did have a slight increase in guidance, but here's the big news here, okay? And this is something to keep an eye on in general in the market, especially as we go through fourth quarter earnings here, starting in a week and a half or so. They brought back a $2 billion stock buyback program. And so what's going to be interesting is what we saw last year is a lot of companies, the financial sector was forced to stop buybacks, but a lot of companies canceled their stock buyback programs last year. We know, I mean, honestly, Fed number one is responsible. So if you've loved the money you've made in the last 12 years, the Fed is the number one responsible party for that. If you love the inflation for that, the Fed is the number one responsible party for that. But when you're looking at other key metrics of why markets have been so bullish in the last 10 years, consumer spending and consumer activity in general has been a major theme in that. But buybacks were right there with consumer spending. Stock buybacks, we were talking about buybacks in the tunes of 800 billion in the S&P, 1.1 trillion in the S&P. These are yearly numbers. And so buybacks have been very important to the market. It's going to be interesting if Constellation here signals something a little bit bigger to the market in re-emerging with those buybacks. We know the banks are now starting to do it. Constellation here is announcing they're starting to do it. So keep an eye on buybacks. Companies that do announce buybacks, they are rewarding their investors with basically a higher dividend rate. They're rewarding their investors with the stock buyback by sucking out supply out of the market, and price typically does go up. So even though there's no trade here on Constellation, given the fact that it broke out yesterday, and it's kind of fairly volatile, keep an eye on Constellation at 220 if we do see a retracement. But more in general, I want to talk about Constellation in terms of the buybacks there. Walgreens would be the other one I wanted to talk about here today, just very briefly. WBA, thank you, Ty. Walgreens here has been in one of those very long, methodical potential reversal patterns here, where tremendous downtrend, really stagnating at the bottom there for good 8, 9, 10 months. If you'll switch this out to a weekly chart, we can consolidate some of that. And what you're seeing a little bit here, and the reason I wanted to bring up WBA, and I'm not going to be doing as many earnings roundup in the future as I did in the past. I'm going to be doing major earnings announcements. I'm going to be doing earnings announcements that have an impact on the market, or wanted to update our community on something, or potential reversals like WBA. We like throw a dart at the market right now and you can find a good breakout with momentum. Correct, Tyler?
Oh yeah. You don't need to be picky. I mean, you got, or you can be picky because
you can be picky.
Choices. Yeah.
Right. There's a lot, but not a lot of people put out there, hey, look at this good reversal type pattern. Right. So I do think we want to look at some of these areas of the market this year that were stuck in the mud last year. And there's this philosophy of dogs of the Dow, right? The ones that were the worst underperforming last year, they have a tendency to come back this year. Well, when you're looking at not Conagra, but Walgreens never participated in the euphoria of the market last year. It really just consolidated and recovered and still showed a loss on the year. But what you're looking at, in my opinion, from a technical perspective, is you're looking at an inverted head and shoulders reversal pattern. And Tyler, you can you walk them through that inverted head and shoulders a little bit?
Sure. Yeah. When you look at, by the way, Matt's right. This looks more bullish than it's looked in the last 52 weeks, right? So if you were saying, I need to wait for Walgreens to give me a reason to warm up to it, you arguably now have that, right? You arguably now have it. So in regards to why that's the case, when you look at the technical posture, remember the charts are just a reflection of collective behavior, right?
Yes.
And so when you look at the pivots, this thing was making lower pivot lows coming into the end of the year. And as long as that pattern continues, there's no change. There's no reason for me to warm up to this stock. What an inverted head and shoulders pattern does is it shows you a transition from sellers being in control to buyers being in control. And so typically, and there's a lot of variation to the pattern, but the gist of it is, let's say this is the left shoulder. Pretend like you're standing on your head. Tim, actually, we need a visual on this. Tim,
You're doing a headstand. Tim,
quick
get on a
headstand on the
headstand.
desk, Tim, if you would, please.
Mm-hmm.
We know you can do it.
Let's
No
see
go?
if that's going to happen. Go ahead.
No. Hey, look, I think he
You
might
can
try
wait.
that.
You can
He's
wait.
thinking about it.
Not a chance. No, I'll turn my video camera upside down for you. How about this? Hold on. I got you.
That would work.
Nope. Unplugged it. Nope.
Yep. Okay. Sorry, guys. The amateur here with Timmy. Give him. He's only done this a couple times. We'll give him. We'll see if you come back, Tim, with it upside down. But the idea here is left shoulder, head, and then you have higher pivot lows, which are kind of your right shoulder, right?
Yeah.
So there we go. Okay, Tim.
Look at Tim. There you go.
You have to hold it, don't you, Tim?
I have to, well, maybe not, but yeah, kind of.
I need that show. We'll get it. The point is you got to transition from lower lows to higher lows. The higher shoulder, the right shoulder of the pattern, tells you demand is increasing. Every other time, buyers waited until the price went lower and then they bought, and then it went lower and then they bought. This time they're like, no, we're more anxious, we're more aggressive, we're willing to buy this at higher prices. And so that just shows you a change in tone, a change in character. Buyers are getting more aggressive, and they followed it up. And this is what Matt was pointing out. They followed it up by not just making higher lows, but by breaking resistance and making a higher high. So that kind of completes the inverted head and shoulders pattern. Go ahead.
Yeah, and honestly, Tyler, as that inverted head and shoulders formation is forming, you can kind of see earnings start to decrease as the pandemic picked. It started to increase in the later part of the year, and now we're seeing another increase. And so you're looking at it from a fundamental perspective as well, and you're saying, okay, it didn't participate in what happened last year, but we also can't expect that momentum to repeat last year. Are there these opportunities on the bottom of the market, especially with that economy reopening up theme that has played very significant in the Russell 2000, specifically industrial stocks, energy stocks as well, basic material stocks as well. So can WEA, a cyclical stock in the staples area of the market, can that show some love here? And from an earnings number, they come in at $1.22 a share. Expectation was $1.02. Revenue numbers came in at $36.3 billion versus the expectation of $34.9 billion. So a nice little beat on the EPS numbers, a nice little beat on revenue numbers. The fundamentals are starting to turn a little bit for Walgreens. The technicals have been turning ever since they really kind of hit that bottom in price there in October with the positive earnings numbers as well. So you got to like what you're seeing here from a longer term perspective. And you know what? If you're looking to bottom fish here, you could do worse than getting a company that's starting to pump in a little bit more revenue quarter after quarter. This is not a high flyer. You cannot expect this to be a high flyer. It's Walgreens, for goodness sake. Yeah. But if you're looking for something a little bit slow, right covered calls on, maybe bottom feed a little bit. You gotta appreciate that breakout of 44.
Mm-hmm. Mm-hmm. Yeah. Love the analysis there, guys. Appreciate that. And then I only had one or other two corporate news items, Matt. One of them was on T-Mobile. I know you had one upgrade or two upgrades as well. But I did want to talk T-Mobile, and then we've got a chart of the trade we're going to go through a little bit later. Good news out of T-Mobile, out of a stock that I like, and I think most of the market likes, and has been threatening a breakout up here. Matt, the service provider added 824,000 postpaid phone subscribers. I saw the phrase today. I'm like, isn't that just a phone?
Subscribers.
Yeah, that's a subscriber, right? Yeah,
subscriber.
It is. That's just somebody who pays it at their bill at the end. During the fourth quarter, obviously bringing this total 5.5 million. It's got a little bit of sentiment behind it here, Matt, in terms of the iPhone rollout with Apple this year and all that kind of stuff. What you read on T-Mobile here?
You just gave it, bro. You break it down.
I like it.
I have something to say on this one, Tim.
Yep.
I switched to T-Mobile a week ago.
Did you?
Yeah, they had I've been with Verizon. I'm on a family plan. We have like 7 lines on it, but we've been with Verizon for years and years and years. And this is just anecdotal, but they had a very, very compelling reason to switch. We made a fair bit of money, and you didn't have a contract. So it's like in 3 months, if we don't like it, we go back. But yeah, paying off phones, giving you all sorts of credits. We did it through Costco. But anyways, I'm one of those. I'm not surprised. Their numbers were good. Whatever their bonus was, it was good. It was worth it for us to switch. So,
And then one upgrade I did want to make a note of, and then we're going to get into the coach's corner. And we've got a trade I want to analyze with Coach Tyler that he had on the Trade Masters yesterday. We're going to take it to a step further and talk how to play the options on that potential technical setup as well, some different scenarios in it. But one more quick news item, if we can. JP Morgan, they had an upgrade to buy from neutral, calling it best in class for the 2021 in the banks. This is out of Bank of America, one of their competitors. JPM in the financial sector in general, Tyler. I mean, these yield curves are steepening. Financials can now buy back their stock. XLF has been hot. We know that. JP Morgan has been a leader in that space as well. You got to like banks coming into this quarter, don't you think? Although we do have earnings on a lot of these banks coming up in about 10 days.
Yes, I like banks a lot. I think if you're following price action, you got to like them. So I'm a buyer on dips. I mean, I'm already in financials, but I think it's tough to chase, but they look good.
Yeah, love it. Love it. And then the last thing I wanted to do today, and then we'll do some other stuff right at the end as well, last thoughts and whatnot, but I did want to get into this trade setup on Peloton. I was going through my morning routine, looking at different watch lists. There's a bunch of stuff that's on the option report I'm paying attention to right now, the breakout on Autodesk, moves on Marvel, stuff like that. But Tyler, you had a trade from last night's show on Peloton that you went through the technicals on and kind of talked about what's happening there from that perspective. And I wouldn't mind taking that conversation one step further and start talking a little bit about the options market and how we can approach that, how we can play it. If you're an option trader, you have so many different tactics you could use. Delta tactics like long call, bull call, theta tactics, like bull put, those types. But you can also do combo tactics as well. Tyler, how are you approaching this Peloton trade? First, start with the technicals in case anybody, missed it, no problem. Don't worry about that, Ty. Don't worry about that at all. But in case somebody missed the show last night, what is the technical read, and then how are you approaching the options market?
Yes, and if you guys hear I got my little assistant here. Okay, so she came in.
Nice, sweetheart.
You looking at yourself?
How old is she?
She is oh shoot, I don't know, 2.
It always warms my heart when I see, kids and dogs and all that kind of stuff in somebody's home office, trading office, because it's my life. I've got that stuff running around all the time, Tyler. So
she's going to help me break down. Yeah, she's going to help me break down T-Mobile here. Yeah. Or not T-Mobile, Peloton.
Peloton. All right. Sounds good, bro. Yeah. Run with Peloton if you can.
Yeah. So look, Trade Masters, here's a reason why you should join Trade Masters on Wednesday. We talked about Peloton yesterday. This was one of my picks. And by the way, I still lost. Okay. I still lost. I brought Peloton and I still lost. This was a very nice bull retracement. Okay. Every week when we do Trade Masters, you can't do that, sweetie. It's too loud. I'm like Tim with his webcam. I just can't turn this stupid thing off. Just push it hard. Okay, Daddy's
one of my favorite things in life is just rolling with the moment, my friend. There's nothing wrong with this at all. In fact, it's warming my heart.
What's happening here? I'm back.
Tyler's daughter is taking over his keyboard and his computer.
That's all that matters.
She's got this stupid thing.
Tyler,
don't sweat it, bro.
Tyler, if you would have done this yesterday, you would have beat Greg.
That's right.
Right.
Yeah.
Okay, so the setup in Peloton, just a gorgeous bull retracement to the 20-day moving average, old pivot high, right? The old phrase is old resistance becomes new support. And it had a nice reversal candle yesterday too. It had a lovely little risk reward. We also had good volume confirmation. So high volume on the breakout late last year, and then no volume on the pullback as well, which tells you this is just slight profit taking, garden variety profit taking, no major selling on the pullback. From a technical perspective, that is about picture perfect when it comes to a bull retracement. So I liked it. I mean, look, I liked it as a bull retracement. The trade that we looked at yesterday was a bull call spread. This has low implied volatility. Tim, the IV rank is like 6. Okay. So The options are the cheapest they've been all year long, essentially. That makes me want to buy calls. But Peloton, even though the implied volatility is the lowest it's been all year long, at 71%, that's still pretty high just on an absolute basis. So in other words, long calls are kind of expensive. Mm-hmm. So that's why we did a spread. So we had looked at buying the 155 for February and selling the 165. The trigger was yesterday's high. This is up 6% today. It triggered right at the open. So
this is Tyler being like, I can't believe you guys did not pick me last night. It's up 6% today off a great support bounce. What are we doing? I love it. I love the setup here. There aren't a lot of clean retracements right now. There's always going to be something you can nitpick with right now on any bullish retracement. I think what you got to do on bullish retracements is look at the support bounce it's coming into and really focus on the intraday analysis on that support bounce, because the data is going to be choppy coming into it. There's not a lot of clean flags, clean retracements right now. I love the support bounce here on Peloton. I love the bull. Did you choose a bull call spread here on a spread?
Yeah, we did a bull call. We did a Feb 155, 165.
Feb's aggressive in terms of time frame, but Peloton
and it moves fast. And the reason I did Feb is because if it didn't work, we were going to get out quick. And I feel like because the setup lent itself to a decently tight stop loss, if it doesn't work, I'm out quick anyways, and I make the money faster if it pops and it moves. So
and Daniel, and let me answer Daniel's question. He says, but after a 5% pop, is it still in play? You're 1 day in terms of the confirmation. Everything is still in play 1 to 2 days into the price movement. It's really like with the Russell 2000 up 5.5%. When you're talking about an index, there's a lot of stocks up 12%, 13% in that index when it's doing it. And so with an index up 5%, I'd be like, yeah, the trading's done here today.
And I got a thought to add to that as well.
Like Peloton can absolutely fly, but again, you're only 1 day in your confirmation. And so what I would do if I'm looking at this is I'd say, okay, yeah, I'm not in the trade above yesterday's high, but if the analysis was good yesterday, the analysis is even better today with confirmation. And so because the analysis is actually better today because of confirmation, now you simply got to look at, okay, where's that entry today? Where's that stop loss today? Do I still have a positive reward to risk ratio today? And if the answer to that is an affirmative, then it is still go time.
Yeah, and just one thought to add to that. I think it's a really, really good explanation and a good question as well, Daniel. But I mean, 5% on Peloton is one ATR. It's just one.
It's a 1 day movement.
It's a 1 day movement for this kind of stock. 5% on Peloton is like 1.5% on Coca-Cola.
Well, and just to be clear, the last leg up lasted 8 days. And so you're 1 day into a potential leg that could last 8, 9, 10 days. You're not too late there.
It's a good question out of Mickey as well. Where would you move your stop loss on Peloton if you got triggered in today? And I'll answer that first personally.
That's a great question.
I would not move my stop loss after 1 day confirmation personally.
Some people would.
Some might move it intraday.
I think it's a debate. I think it's a debate.
Yeah. Tyler, what about you?
I think it depends on what was your strategy. Did you use call spreads? Did you buy the stock? If I did a bull call spread, I would probably move it to today's low. I mean, if it took out today's low after this big of a move, that would probably sour my outlook enough. I wouldn't go any tighter than today's low if it was a bull call spread.
No, I think that's probably true on most things on any strategy, really. I think if you tighten that up too much, all you're going to do is get whipsawed and miss out on a bigger price move, because the reason you're buying it yesterday or today is not because you think it's going to go up 5%. It's because you think it's going to go, where's your target? 167 by 180 ish. It's somewhere in that ballpark. So, I mean, you're not targeting 152, you're targeting 157 on that retracement. You're saying it's going to get back up there. So no, I don't think you should aggressively manage a stop loss in the first day. I do like Tyler's call at today's low. I do like it at 145. So I can completely understand somebody like Tim is like, I'm going to give this a little bit of room. I'm going to keep it underneath that pivot and let Peloton do whatever it wants to do. I want to make sure I capture the bigger movement here, and I can understand somebody saying I want to adjust that stop loss to come into a break even. But if you tighten that up above 145, I just have a feeling you're just going to get stopped out and complain.
Yeah, you don't want to get whipsawed. So, but there's a discussion in there
Listen,
about
you can't choke your stocks, guys. You got to give them a little bit of room to breathe.
I think people make that mistake far too often, quite frankly. I think
especially in a bull market, right? Like we assume this is going to go higher. Yeah.
Especially, and not only a bull market, but Peloton.
Yeah.
This isn't like that safety staple stock. This is a stock that flies. It has an ATR of 5% right now.
Now I got to go watch for Coach Greg's picks to see how he beat you here, Tyler.
Yeah,
because
Greg's good.
This was a great pick here. I'm going to go watch the replay of Trade Masters. Not going to torture any.
I love Trade Masters.
Tyler. He's got to chase
I love
kids
putting
around.
the coaches. I love putting the coaches against one another. Yeah. Those coaches are amazing. I love it when they get out. Oh, I'm winning this. Let me give you the analysis. I love that.
Competition's
trade
good
a little
competition
is good for everybody, and no, nobody in tackle trading gets a blue ribbon for participation, Tyler.
No, winners.
We don't do the blue ribbon participation trophies.
Winners and losers, my
friend.
You
win or you lose, bro.
That's right. That's all I got here today.
And if you lose, the message is get better.
Get better next time. That's all I got here today, guys. Let's start moving into final thoughts. Tonight we're going to have a cash flow club, 8:30 p.m. Eastern. If you're a pro member, make sure you join us. Obviously on the events page at Tackle Trading, you can come and find anything that we're doing and, come and join us on the back end with our pro membership. There's a link in every YouTube video that we ever do. If you're a new subscriber to our YouTube channel and you've not yet met a member of Tackle Trading's pro membership, come and try a 15-day trial. Come see what we're doing on the back end. It's a $97 a month subscription that you'll pay over time, but you can try that out 15 days for free. Click that link in the YouTube description below. Veterans, give me those thumbs up. Always helps. I appreciate that so much. And if you're out
Jeremy, very quickly, Jeremy Johnson, good member of Tackle Trading. He asked for LI a couple times. Let's give Jeremy some love here. Let's look at LI real quick. And I believe his question is specifically towards stop loss placement underneath $30.
I like this stock. This is a good move. It's trying to break out as a momentum stock. $30 for a swing trade. I like $30 as a stop. Yeah.
I don't, and I want to have a conversation on that. I don't like a stop loss on a swing trade that is literally represents about 14% of the stock price, because in an option trade, that option is worthless. The stock goes down 10%. And you buy an option, you don't have an option. That's a pretty big movement on a $30 stock.
Well, it just moves that much. I mean, it's ATR is probably pretty high. That's the challenge.
Well, yeah, a position trade, I do like a stop loss under 30. A swing
if you're
trade,
trading the break, you do today's low as your tighter one.
I think you got to approach today as a breakout, and not a retracement. And because of that, I don't think you look at $30, although I would like it under $30. I just think you're taking too much risk. I think you got to look at this as a breakout after consolidation, after a 200-day support bounce. And so if you're looking at stop loss placement here, and you're right, I mean, the ATR is $2.32. You're talking about 2 ATRs underneath the stop loss. Even at that, I mean, that's still a pretty loose stop loss on a swing trade. I just think you got to think about that. I mean, $30, 34 to 34, 30 to 34 doesn't seem like a lot. It represents quite a big movement on a stock in terms of percentage. When you're looking at LI and you're looking at it as a potential breakout, drop it down into that 1 hour time frame. And one thing I absolutely love about breakouts is when you got a clean trigger on a breakout, it breaks out of that. The reason you're buying this is because it broke out of 33.30. That's why you're buying this. You're buying it on the hourly breakout of 33.30 with confirmation. By putting a stop loss underneath 30, you're getting it underneath a wide range of intraday support that's going to help you be successful. But you're also, if you're trading the stock, I think you're okay with a stop loss under 30 there. If you're trading the option, I don't think you're okay there, which means if you're trading the option, I much prefer a stop loss underneath the breakout of 33.30 than I do underneath 30. I like this. I like a 30 stop loss with a stock in a position trade. I love the cleanliness of that breakout at 33.30 by 33.50. I think you start your stop loss conversation with the very reason why you're looking to buy this. And the very reason you're looking to buy this is that breakout on that hourly chart out of the consistent 33.30 to 33.50 range. That's where I would start that stop loss conversation with, is underneath that level. Once again, the stock, I think you're perfectly fine putting a stop loss under 30. The option, due to the leverage, a 10% movement in the stock, options are leveraged at 10 to 1 typically. You just lost all your money. You shouldn't be trading options like that.
Yeah, like the low here, 32.85 for today's low. You add a little bit of ATR to that. You can come into an intraday level. The premise behind the breakout is
Listen, we can add to my analysis, but it literally is
the numbers.
30 or $30. Like anywhere in between those numbers, all you're doing is within a tremendous amount of chop. And so you got to put the stop loss underneath 33.30 using an ATR rule on the option, or you put it under 30 with the stock position.
Makes a lot of sense.
Does that help, Jeremy, that conversation? Does that help?
Yeah, and I'm glad he reminded us. He did ask us earlier in the show too as well, and I'm glad you caught that there, Matt, for sure. Yeah.
I want to help him. I like Jeremy.
Interesting reversal pattern there. Grabs my attention just from an eye. Just the eye test looks interesting to me. So very good. All right, guys, that's our show here for Thursday, 1/7/2021. As always, appreciate you guys. Tyler, I know you got to bounce. I'm just going to give the last thoughts to Matt here, and then we're going to wrap this one up. Matt, any final thoughts for the team out there?
Oh, regardless what this world throws at this market is just resilient. It's just resilient. Trade with your eyes and don't let your belief system impact your market, your read on the marketplace. And Tyler, your daughter wants me to go adopt another baby. Like, I just love babies.
Just
so cute.
Just
so
adorable.
cute.
Yeah.
So
all right. Appreciate everybody out there.
You know what it does, Tim? It always reminds you of why you do everything you do. Right?
100%.
Seeing Tyler, a father, his daughter sitting on his lap, messing around with his keyboard, messing around in front of, a couple, 150 people and 1,500 people that will watch this video. And there's his little daughter. It's awesome. It's life. Life comes at us. Go with it. I love it though.
It's a heartwarming moment, no question about it. We love it, and we love Tyler as well. Appreciate his attendance and analysis and insight as he always brings. That's our show here for today, Thursday, guys. We'll be back tomorrow, same time, same station, with Coach Frank, back for another Friday edition of